Hi, I am the Finance Catalyst and my name is Gabriel. Welcome to this special episode of my podcast where we talk about financial matters. On today's episode, I'm going to be sharing with you 6 wise questions to ask before making an investment. About when it comes to investing, before you even put your hard-earned money at risk, you need to ask yourself several questions. You want to fully comprehend the risk that is involved before even entering any form of investment. You have to ask yourself, what are you risking in the first place? You need to know. Because when you make intelligent decisions, investing can be incredibly rewarding. It's important to note that. Not only is it going to yield you good returns, but it can also be satisfying knowing that you are making a good decision. So it's important to understand that when it comes to investment, doing all of the research needed and acting on it can bring you mental and financial rewards. These are important to note. There's a big chance your confidence increases after making a good investment decision. So you need to know the risk and the reward when entering any kind of investment. You need to know those things and you need to be well informed about the decisions that you take. This is very, very important. It's very, very important. So on this special episode, I'm going to be sharing with you 6 wise questions to ask before making any form of investment. Number 1 of the questions you need to ask is, am I willing to lose this money? Am I willing to lose this money? This is the very first question you need to always ask yourself before putting any money at risk. The only money you invest should be a money that you are willing to or able to lose. Every investment comes with inherent risk. This is a risk that you cannot avoid. Some of them are actually greater than others. Typically, the greater the risk, the bigger the potential returns. So you need to figure out what you are willing to risk to make investment decisions. This is something you must figure out and pay attention to. For some products like savings account, you don't have any form of risk. In one of my episodes, I talked about savings. But the biggest risk to your savings account would be inflation. Inflation could outpace the interest you are earning on your money. Thus, your money would be losing value as time goes on. However, other than that, there is no risk of you losing it because you actually have it on the account. But if you are considering investing in something that offers any significant return, you need to be prepared to lose some, if not all of it, because things can go wrong with the investment, and knowing when to take risks is very key. Knowing exactly when to take your risk is very key. You also need to be skeptical about investments that offer high returns. This is something most people don't know. You see someone, maybe someone is offering you an investment with a return of close to 20-30%. You are already getting attracted to those kind of investment because of the kind of high return you see. But you really need to be careful with those kind of investments. Those investments that offer high returns. This is especially true because if you aren't entirely certain of the inherent risk that comes with that kind of investment, there's going to be an issue. There are complicated asset classes with high return potential. Like it's potentially true. There are so many complicated asset classes with high return that not everyone fully understands. This can include several forms of investment, cryptocurrencies, or even mini bonds. But you can tell it from the potential return if the potential return is high, when you are comparing it to even a much lower risk investment like bonds. So you need to really be careful about your investment. When you want to make an investment, the first thing you need to also put in mind is that, are you willing, the amount of money you're investing, are you willing to lose it? Because there are sometimes the investment might not necessarily go the way you want it to go. So what do you do in that scenario? What do you do in that predicament? This is something you need to ask yourself. Number 2, you have to ask yourself, do I understand the investment? And is there enough liquidity? This is a very big thing. This is a big thing that you need to figure out before making any sort of investment decision. You want to know exactly what you are investing in. This is especially true for you because you are going for either a riskier and higher reward investment, or maybe a less riskier and a lower reward investment. So what you need to be asking yourself is, what is it that I am investing in? How does this work? Who is the one behind it? These are important questions you should be asking yourself. How easy would it be to take my money out when the time is matured? When the maturity period has elapsed, how will it be easy for me to get my money back? All these are essential questions to ask yourself. These are things you need to know before even putting your money anywhere. You need to know how easy it is to get your money out of the investment if needed. If your plan changes, for example, can you take your money out right away? Are there limited options for liquidating? Is there sufficient liquidity for your exit of the investment? You have to figure out if people are buying and selling the asset or thing or the thing that you are investing in. You need to figure those things out. You need to know. For instance, investors are constantly buying and selling stocks. There's a high liquidity which makes it easy to get in and out of that investment. So do you need an agreement before you can sell? You can take the real estate market, for example. Most people, they just go in there, they purchase a property and they wait for a few years for the property to gain value, and then they resell it. So these are things you also have to look at. A lot of high risk investment can be good, but you may want to have an ample experience before getting involved with those kind of investment. You just don't jump into an investment because you see that the returns are high. With those high returns comes really high risk. So if you are someone that is willing to go for those kind of, you love to take risk, then these are the kind of investment you could consider. But the higher, like I said, the higher the risk, the higher the returns. So it's better to opt for a simpler and less risky investment options. If you are not so experienced when it comes to investment, it's always better and it's safer to opt for simpler and less risky investment options. If you are someone with inadequate experience, or you are someone that cannot afford to lose your money, then you should go for that. It's also a good idea to avoid investing in anything that you don't fully understand. This is very, very important. You may want to opt for diversified funds instead. This offers good returns with lesser risk, but it's important, don't invest in anything you don't understand. You don't have a full understanding of. These are important things to pay note of. Very, very important. So pay attention to this part. It's important. It's important to pay attention to this part. Number 3, you have to ask yourself, should I seek financial advice? This point is important. It's always a good idea, to get professional financial advice if possible. Because this can help you better understand the market conditions and the investments that you are getting into. They can inform you, on asset classes, on the different kind of investment opportunities that are there, and the risks. What are the risks that are involved with this investment? That's why you have these financial experts. That's why you have financial advisory. They can even formulate a better and more diversified investment plan that fits your income and risk profile. It's always good to talk to a financial advisor because it gives you this financial advisor helps you to see what are the risks and the reward, and it could even come up with a special diversified investment plan that will fit to your person, to your risk profile, your appetite for risk, and also your income. So it's important to ensure that you choose a regulator that is authorized, not just anybody. There are people that can just go there and talk to you about advice, financial advice, but it's important to study carefully and choose people that that you can really talk to and you can trust and you rely on with information. These are very important, and you will find that a higher risk and higher return investment can ultimately provide you exceptional opportunities. However, they are only for seasoned investors who fully understand the risk, So it's important that you should pay attention to things like this. It's really key, when it comes to investment. So many people don't pay attention to things like this, and when there are issues, they don't even know how to deal with those kind of issues. So this point is very, very important. Number 4, you need to be able to understand. You have to ask yourself that question: do I have an investment strategy? What's your strategy for investment? It's important to ask yourself these questions, because sometimes people just they see opportunities out there in the market, but because of how enticing these opportunities are, they don't even have a strategy in terms of what is the duration of my investment, what instrument do I want to invest in, how long do I want to invest in this instrument, what am I looking at with this investment, what do I want to achieve with this investment. These are questions you have to ask yourself in terms of your strategy. You need to come up with a plan. You just don't invest in anything. No. The fact that someone or a colleague of yours or a friend of yours is investing in this thing and is coming out with returns doesn't mean you should go in and invest in that such material or such instrument. You are different, and you have to have a plan and a strategy on how you want to invest. So this is really, really key. This is very, very key when it comes to the area of investment. So number 5, you have to be able to ask yourself, how informed am I about the investment market? How informed are you? So many people don't read a lot. They don't make research. They don't try to understand what is the market saying. How is the market relating? For example, in terms of real estate, how aware are you about the real estate market in your environment? If someone should ask you the question, what is the average return on investment in real estate properties in a particular location, are you able to confidently give someone these answers? Because you need to be aware. If someone should ask you, how much was a property costing in this particular location 3 years ago and how much is it now in terms of value, can you be able to respond and say of a truth, this is what I think it is? This is very, very important, because investment is directly proportional to value creation. Never forget that. So it's important to take note of the kind of investment you make, and it's also important to be aware about the environment at which that investment occurs. It might not necessarily be a place that you are familiar with, but that's why you have financial advisors, people that could help you and give you more information. But most importantly, you can get these informations online. There are so many information on the internet today. It's just for you to be available, to make your research, do your homework, try as much as possible to understand the market. Investment is not only about making money, but it's also about creating value for your money. So you need to first establish a definite purpose and the reason why you choose to invest in anything. It could be whether financial or non-financial. That's how it is. For you to be able to invest in anything, you need to establish a definite purpose and the reason for that investment. So it's always important. Always take a very good analytical research approach on the kind of investment you choose to get into. You have to weigh the risk and the returns before embarking into it. You have to understand what is the business performance. What is if it's an investment company, what is their performance like in the last 3 years, in the last 4 years? You need to check those things. You need to check their market trend. How are they performing in the market? What is their reputation like? These are things you have to ask yourself when it comes to making your research in terms of investment. So this is also very important to take note of. You have to understand that this is very key for your investment. And the last one, number 6, you want to ask yourself, do you understand your level of risk appetite when it comes to investing? Do you understand your level of risk appetite? So many people don't really know the kind of risk that are available. I'll be addressing that in another episode. But just to quickly talk to you about types of risk, there we have the people that are risk averse, and we have people that are risk lovers. They want to take risk. They don't mind taking the risk. But in these two risks, you have also the inherent risk, the risk that you cannot avoid. It's just there. But most importantly, you need to understand what kind of risk person are you? How do you perceive yourself when it comes to taking risk? Because that will give you a much more clear understanding on how you want to invest. If you want to look at a more risky portfolio of assets, or you want to look at a less risky one. Some people are concerned about the kind of investment they involve themselves, because they just don't want to invest in anything that will give them a challenge later in the future, where they start they cannot sleep at night. They are thinking about their investment, because of the risk that is involved. So if you're that kind of person, you wouldn't want to go for something that has a high risk because you are seeing a high return. No, you want to take a step and really analyze what's my risk appetite, before moving on to taking or making a decision when it comes to this investment. So these 6 important wise questions are important to always ask yourself before you even make any form of investment. Always pay attention to the market. Always know why you want to invest in anything. Always know. Always make your own research. Do your own research. Study to see what opportunities are there and why these opportunities are there, and are these opportunities beneficial to me. You have to understand those things. You have to understand your risk appetite. You need to know why it's important for me to invest in this thing. And also you have to understand your investment strategy. You need to have a plan. You have to have a goal when it comes to investment. Why am I investing in the first place? What do I want to achieve with this investment? These are things you have to pay attention to. So having said all this, I hope this particular special episode of my podcast was enlightening to you and beneficial to you. Investment is something that you don't go wrong with, but it's important that you pay attention to investment, especially when you are building your finances and you are looking at achieving something in the long run. It's important to consider a form of investment, any form of investment. You don't necessarily have to have the whole amount of money when it comes to this, because some people will tell you, will say to themselves, I want to invest in this, I want to buy this property, I want to do this, but I don't have the complete funds, I don't have the funds. Investment is something that you can look for. There are several forms, and you can start small from where you are. You don't necessarily have to have 100% of the funds for you to start. There are several opportunities in our environment today, and these are things that you could look at, especially in our real estate environment, private equity environment. There are so many opportunities. So look at the ones that you feel fits perfectly to your income and to your risk appetite, and that's why I always recommend you to always speak with a financial advisor, because he gives you more clarity. He's an expert in this area, and he will give you more information about personal investment, how you can go about personal investment, which is very vital and important to you. So having said all this, I hope this was beneficial to you. Until again I see you in another episode of my podcast, I want you to always stay financially focused. Always pay attention to your financial environment. Be aware of your financial environment, and always stay financially healthy and safe. Until I see you again in my next episode, stay blessed and take care. Cheers.